Hi, this is Jeffrey Kerr at Kerr Financial Group, and today is March 15, 2023. It's the Ides of March, and apparently the banking system better beware. So, this video is in conjunction with a brief newsletter that we're attaching to the email that I want to get out to try to talk about the Silicon Valley bank failure. And in the newsletter, what I wanted to say is what and who are Silicon Valley, what happened to trigger the failure, what did management do, and what some of the risks are moving forward. So since Monday opening, a couple of important developments are the Federal Reserve and the banking regulators have guaranteed the deposits for all in total for Silicon Valley Bank. And this is important because over 97% of Silicon Valley Bank deposits exceeded the 250,000 limit that the FDI had previously established. So there was risk that a lot of depositors were going to get scalped and not get all of their money back, and how far that damage would have gone too. So the Fed and regulators said we're going to guarantee the all deposits, and then they closed Signature Bank on Sunday and applied the same guarantee to them. So this morning, the Credit Suisse, the large global European-based bank, is rumored to be in trouble today. There's been some rumors been around Credit Suisse for quite some time, and today the rumor is that the Saudis, who are one of the largest shareholders, declined putting any more capital in. So now, the worry is that any failure or impairment of Credit Suisse and how far does that ripple through the system, both globally as well as in the continent of Europe. So those things are going on. It's a lot of turmoil in the banking system, and it's hard to know how this plays out. I think a lot of people are going to take a guess and tell you that they know something, but I just don't think that there's anybody that really knows how the developments are going to play out and what the results are. I want to point out a couple of other issues and upcoming data points that I think are important too. One is this Friday is St. Patrick's Day, as well as the options and futures quarterly expiration. They call it quadwitching. It's the futures on stocks, commodities, and like that, as well as the options on those futures, options on stocks, and options on the stock indices. And the reports are there are some large positions out there that need to be unwound or will be taking losses potentially. And so that increases the chances of big volatility, today, tomorrow, and Friday. After Friday, the next big data point is next Wednesday. The Fed meets and is going to announce, their interest rate decision. Last week, there was talk of about a 50 basis point hike. And today, given what's going on in the banking system, some poor retail sales, lower producer price index this morning, now there's talk of a pause. And there's a lot of people who are, calling for the Fed to start cutting interest rates and think they've gone too far. I think cutting interest rates with inflation, somewhere in that 5 or 6, percent range is probably not a good signal and might backfire. But nevertheless, there's a lot of people calling for the Fed to reverse and pivot and reverse course and start cutting interest rates. And we'll see, if that plays out later this year. Again, March 22 is the next meeting. The next meeting after that, I believe, is in early May and then early July. So we'll see what happens. There's going to be, I'm sure, a lot of attention to what the statement from the meeting is, as well as Jerome Powell's press conference after that. So if there's any questions, comments, please reach out to me, call, email, text, whatever's the easiest. And also, if you find the video useful, please like it on YouTube and also subscribe. Thank you and goodbye and good luck.